Tomorrow, Fed Chair Jerome Powell is scheduled to speak at the Kansas Fed's annual Jackson Hole gathering, Kansas City Fed's. In last year's speech, which lasted only 8 minutes, he was clear in his warning that the central bank would continue its rapid rate hike campaign to combat inflation, which back then was clocking in at around 9%. But this year, the tone could be less aggressive thanks to cooling prices. Some are even optimistic the Fed may be able to pull up a successful cool down and avoid a recession. The Fed's next moves are still very much up for debate. While Powell's expected to warn of more work ahead, folks will be watching eagerly for more details. Jeanna Smialek is a Federal Reserve and economy reporter at the New York Times. She is in Jackson Hole. Jeanna, I'm really disappointed in you that you're not wearing some sort of cowboy hat right now, but it's all right. We'll give it to you. You still have the gorgeous backdrop. Tell us, what's the sort of buzz on the ground there over what we're going to hear from Jay Powell?
Yeah, next year on the cowboy hat.
Excellent.
I think it's an open question what we're going to hear from Chair Powell at this event, because he's got to walk a fairly fine line here. You know, the Fed is feeling really good about the fact that inflation is coming down. They've seen some of that progress that they've been hoping for. Headline inflation is down to 3.2%, which is obviously about a third of where it was at this time last year. But at the same time, we've got pretty sticky core inflation. That number's quite a bit higher, almost 5% still. And he does have to worry about the reality that this economy just seems to have a lot of boom. You know, it's had a lot of staying power. And so I think the Fed has to both signal that they are willing to do what it takes, still resolute, still focused on getting the job done, while also avoiding signaling that they're going to do so much that they're going to push the economy into recession. So I imagine we're going to see some sort of balanced message out of Fed Chair Powell.
Is it clear what they're going to say about the consumer right now? Because we have been pouring into and through, sifting into data about some of the reports that have come out this week from retail companies who just disclosed their earnings. And I know that the Fed is not concerned about, how Kohl's is doing and how many customers are opting into Kohl's Cash and deploying that. But still, at the same time, I wonder how they're going to be speaking about the consumer in this environment, given the data that they have taken in thus far, Jeanna.
Yeah, so that is such a fascinating question, because I think, if you talk to most economists, the Fed should probably worry about how the Kohl's consumer is doing, right? That is sort of the lifeblood of the American economy. Consumer spending is 70% of GDP in this country. And so that probably does matter. But what's really interesting is what we're seeing in these earnings reports, what some of these big consumer companies are telling us, the Walmarts, the Kohl's of the world, really comes in contrast to what we've seen in the hard data so far. And so I do think this is a moment for caution as they kind of try and wade through all that data, sort of pick up what we're hearing anecdotally, which really speaks to consumer slowdown, and weigh that against what we're seeing in the numbers, which speaks to still a pretty strong consumer. And so I do think there is a little bit of back and forth there, and they're probably going to want to see some more time, some more data before they make any concrete conclusions.
Jeanna, can you give us a little bit of an idea of some color on the ground there in Jackson Hole? In other words, Jay Powell is speaking, yes, but a lot of other Fed officials, economists from around the country are going to be there. What is the vibe like? Are there sort of a lot of side conversations? Are they just all about monetary policy? What is it like?
Yeah, so a lot of conversations about monetary policy. I just walked in and saw President Patrick Harker, who's president of the Philadelphia Fed, getting ready for an interview on CNBC. We're clearly at a stage where there are a lot of Fed officials around. Everybody's kind of talking about what comes next. And so I think the vibe is very much sort of one of, interest and excitement. This is an interesting moment in the economy. It's a challenging one, and everybody's just trying to figure out what comes next here.
Yeah, and I mean, hopefully they do some fun activities along the way together. Camaraderie for the group. That's important, too. Jeanna, just if there was one major takeaway that would signal that the Fed, was successful, was, very much impactful in the course of the discussion, in, just even what they're dispelling from their own minds at this point coming out of this meeting. Is there one thing that the markets, you think, that they might pay attention to and investors could or should latch onto?
Yeah, I think it's too early to tell because we haven't heard what they're saying. But I think that one thing that the Fed has taken sort of some comfort in and has really kind of been taking a victory lap around is what has happened in the housing market. So we've seen home prices slow down quite a bit. We've seen that translate into weaker rent prices. And I think if we hear any more detail on that, on how they're feeling about that situation, how they feel that their policies have worked, I think that could be an interesting place for them to take at least a miniature victory lap. The housing data has been somewhat complicated in the sense that new home sales do seem to be improving a little bit, but existing home sales, there's just really no inventory. But, I think that the sort of housing market is one place where they can look and say, hey, our policies are having an effect.